What if your daily coffee habit could actually build your investment portfolio? Welcome, everyone. Have you ever really looked at your morning latte and thought of it as a mutual fund? Probably not, right? But the landscape of modern finance is shifting so fast right now. Those little everyday expenses that usually, just drain our wallets, they're literally being transformed into the very foundation of our wealth.
And the craziest part? You really don't need thousands of rupees to get started anymore. In today's Indian market, you can jump in with just one single rupee. Yeah, you heard that right, just 1 rupee. Thanks to this absolute explosion of financial technology, building wealth isn't just for the rich anymore. The days of needing a massive lump sum to enter the market are officially over.
So I am absolutely thrilled to welcome you to this explainer on the democratization of wealth, India's Wealth Tech Landscape 2026. Today, we're going to explore this booming, highly fragmented, and just straight-up fascinating world of modern digital investing in India. This ecosystem is growing at warp speed, and my goal today is to help you map it all out clearly so you know exactly what tools are sitting right there in your pocket.
Okay, let's dive right into this. Here's a quick look at our agenda. We're going to take a sort of pick-your-path journey today to organize this whole chaotic app landscape into digestible buckets. Number 1, choosing your stockbroker. Number 2, the spare change hack. 3, digital gold's modern twist. 4, the P2P lending reality. And 5, staying safe with the rules.
Section 1. Choosing your stockbroker, navigating the big three. Let's start right at the foundation of retail investing, which is where millions of Indians take their very first steps into the market.
Let's directly contrast the 3 major players defining this space right now. If you're a complete beginner and you're just focused on simple mutual fund investments, Grow is your go-to. It's known for this incredibly straightforward interface and 0 annual maintenance charges. Now, if you're leaning more toward fast-paced trading, Upstocks is built for you. It gives you lightning-fast execution, but if you're looking to build a serious, long-term portfolio with advanced charting and deep analytical tools, Zerodha is the heavyweight. Just keep in mind, they do charge a 300 rupee annual maintenance fee after your first year. All 3 of them offer free account opening and 0 brokerage on equity delivery, so honestly your choice really just comes down to your personal investing style.
Moving on to Section 2, the spare change hack, micro investing on autopilot. Because what if you aren't ready for a full-fledged stockbroker just yet? Let's move down the funnel to apps that solve a very real human problem, actually remembering to save your money. And this brilliantly illustrates how the magic happens. We call it behavioral automation. Imagine you buy a coffee for 146 rupees using UPI. The micro-investing app reads that transaction alert, automatically rounds it up to the nearest 10, which in this case is 150 rupees, and seamlessly invests that 4 rupee difference. You don't have to think about it, you don't have to budget for it, it just happens entirely in the background, literally transforming your daily spending into daily saving.
Now you might be wondering, where does that spare change actually go? Well, let's compare 2 giants in this micro-investing space, Decimal and Jar. Both of them use that genius UPI roundup automation we just looked at, but their destinations? Totally different. Decimal focuses on routing your spare change into regular mutual funds, like the ones from Navi, or into peer-to-peer lending for higher potential yields. Jar, on the other hand, taps right into the Indian cultural preference for precious metals by exclusively sweeping your rounded-up change into 24-karat digital gold. Which brings us perfectly to Section 3, Digital Gold's modern twist, 24K in your pocket. Speaking of gold, let's pivot to this broader cultural shift happening right now, where a deeply traditional savings habit has received a massive tech upgrade.
What's truly fascinating here is how platforms are gamifying and enhancing the gold experience way beyond just buying the metal. Take Gullet, for example. It allows you to actually lease your digital gold out to verified jewelers, earning you an extra 5% yield right on top of whatever the gold price appreciation is. Then you have Pocket taking a totally different route. They offer free Bitcoin cashback on every single purchase, and you can start with just that 1 rupee entry point we talked about earlier. And finally, StashFin integrates your gold purchases into a unified dashboard so you can track your credit health and your 24-karat gold investments all in one centralized place. But hey, before we get completely swept up in the hype, we absolutely have to actively contrast digital gold with traditional government-backed options. Digital gold offers supreme convenience, right? You get fractional ownership and instant liquidity via UPI, but it is fundamentally an unregulated commercial contract. Sovereign gold bonds, or SGBs alternatively, are backed directly by the government of India, and they actually pay out a sweet 2.5% cash interest. The trade-off, an 8-year lock-in period. So it's a classic choice. Do you want high convenience or do you want high regulatory safety?
Section 4. The P2P lending reality. High yields, high risks. And that balance of risk brings us nicely to our next section as we shift our focus to the high-yield world of peer-to-peer lending.
First off, let's define exactly what this even is. P2P lending platforms are basically digital marketplaces that connect lenders, meaning folks like you, directly with borrowers. These platforms often serve borrowers who might get turned down by traditional banks just because they have irregular income or lack of formal credit history. So instead of demanding traditional collateral, these P2P platforms rely heavily on alternative data, like your digital footprint or your utility bill payments to figure out creditworthiness.
So the absolutely crucial point here is understanding the risk involved. Because P2P lending completely bypasses the bank, guess what? You take on the bank's risk. The RBI made a very clear ruling in 2024. Guaranteed returns are strictly prohibited. While marketing materials might highlight potential returns up to 10%, platforms literally cannot promise capital protection. Impartially speaking, this means if a borrower defaults on their loan, the investor, that's the lender, you, absorbs that loss entirely.
Section 5. Staying safe. The rules. Regulatory reality check. We've seen some absolutely incredible innovation today, but it is time for a crucial reality check on the guardrails of this booming ecosystem.
Listen to this stark warning from a November 2025 advisory by SEBI, India's market regulator. Digital gold products are neither notified as securities nor regulated as commodity derivatives. Investors in digital gold are not protected by SEBI's investor protection mechanisms. This is a massive reminder, guys. Digital gold currently sits right in a regulatory gray zone. Basically, if a digital gold app fails today, you cannot log on to SEBI's Scores grievance portal to get your money back. It just operates as a private commercial contract.
Let's move to the timeline of regulation to see how this builds and is actually playing out. We start with that SEBI warning in November 2025. By February 2026, digital gold remains a perfectly legal but entirely unregulated product. But watch this. By April 2026, the India Bullion and Jewelry Association's self-regulatory organization, or SRO, becomes fully operational. This upcoming framework is going to mandate one-to-one physical vault audits and minimum net worth requirements for platforms to ensure your retail capital is actually protected. The industry is literally stepping up to regulate itself where official regulators haven't yet stepped in.
So, we arrive at our final thought. Technology has clearly made investing effortless, but are you reading the fine print? The democratization of wealth in India by 2026 is nothing short of revolutionary. I mean, from buying stocks for free on Zerodha, to automatically rounding up spare change for mutual funds on Decimal, to holding 24-karat gold right in your pocket with Gulick, these tools are incredibly powerful. But your greatest asset? It isn't just the app on your phone, it's your understanding of the mechanics and the rules behind it all. Empower yourself, take advantage of these amazing platforms, but always stay fully aware of the regulatory realities. Thank you so much for joining me on this explainer, and keep learning.